welcome to the Roy Morgan Weekly Update. My name is Julian McCrann. I'm the manager of the Morgan Poll and the ABIX Roy Morgan Daily News Service, and I'm in this week for Roy Morgan CEO Michelle Levine, who is unavailable. A look at the last week shows heavy rains continuing in much of the country, with floods impacting many regions and regional areas in Victoria and New South Wales in particular. These floods are devastating for the locals involved, obviously, in the regions, and they are also expected to hit all of us in the next few months as they lead to increasing inflationary pressures with prices of groceries and fresh food affected. On the economic front, all the discussion over the last week has been about tonight's federal budget, the first for new Treasurer Jim Chalmers and the Albanese government. Chalmers has spent considerable time preparing us for bad news tonight, although the recent news is good. The projected federal budget deficit this year is set to be cut by around $40 billion on the basis of extra income from key commodities such as coal and gas. And looking at the key weekly measures of confidence this week, they're down. Consumer confidence was down for a fourth straight week by 1.1 points to 81.1, and it's now at its lowest since early August. Government confidence was down 3.5 points to 102. Next week's readings will give an immediate indicator of how Australians feel about Treasurer Chalmers' first federal budget and whether the recent declines in both indicators continue. Perhaps the doom and gloom sentiment from Chalmers has had an impact on voting intention over the past week, as support for the RP is down slightly by 0.5 percentage points to 54.5% on a two-party preferred basis, although that's still well ahead of the coalition on 45.5%. And every week Roy Morgan asks Australians what they expect annual inflation will be across the next 2 years. And this week the measure increased slightly, up 0.1 percentage points to 6.1%. This is the highest we've seen inflation expectations for around 7 months, since they reached a peak of 6.4% in late March, when petrol prices first peaked. Now we're going to look at consumer confidence by the key metric of housing status. And this shows where the declines have come since the RBA began raising interest rates in early May, nearly 6 months ago. Since that time, consumer confidence overall has fallen 15.4 points to 81.1. Clearly the biggest fall has been for Australians paying off their home. Their consumer confidence is down a massive 27.1 points to only 74.3. Now that's the lowest it's been all year for that group. Part of the reason for the new low this week is likely to be the delayed impact of interest rate increases on people with variable mortgages. It can take up to 3 months for an RBA interest rate increase to lead to increased costs for someone with a mortgage. Looking at other housing indicators there's also been a big decline in consumer confidence for homeowners, down 17.4 points to 80.6, and that's as home prices have fallen over the last few months. In contrast to the other two groups, consumer confidence for renters is basically unchanged over the last 6 months at 89. It's down less than a point. And we also have here some figures on mortgage stress. The latest Roy Morgan figures on mortgage stress show over a fifth of people with a mortgage, 21.1%, were considered at risk of mortgage stress in September, the most recent month available. This is equivalent to 948,000 mortgage holders. This figure is below the long-term average over the last 15 years of 22.7% of mortgage holders considered at risk, which is equivalent to about 980,000 mortgage holders. These figures are also well below, if you look at the chart there, the record high of 35.6% reached during the global financial crisis in 2008. And finally this week we look at the projected level of mortgage stress going forward through the last 3 months of this year. Assuming the RBA continues raising interest rates by 0.25 point in both November and December. If the RBA does increase interest rates to 3.1% by December, which we see here, projected mortgage stress will rise to 1.15 million Australians. That's over a quarter of all those with a mortgage. 26.2% of mortgage holders would then be considered at risk by the end of the year. And this would be the highest level of mortgage stress for over a decade, since April 2012, and that was sort of at the tail end of the global financial crisis and also the European sovereign debt crisis which followed. Looking at these figures, on the right hand side of the chart, you can see people considered extremely at risk, and if the RBA does increase interest rates by 0.5 percentage points in the next 2 months. Over three quarters of Australian mortgage, 750,000 of Australian mortgage holders, 753,000, that's 18% of mortgage holders, will be considered extremely at risk. And those are the most in danger of encountering problems paying their mortgage. That would be the highest for nearly a decade, since June 2013. So, after another very eventful week, that's a wrap. And we look forward to seeing what goodies Treasurer Jim Chalmers has in store for us tonight in his first federal budget. I encourage everyone watching to subscribe now for free to our Roy Morgan YouTube channel for all the latest political, economic and market research data and insights. Thank you for listening, and I look forward to next week our CEO Michelle Levine rejoining you again as we consider the impact of the federal budget, and we have the latest data on consumer confidence, inflation expectations and voting intentions. Take care, and we'll see you next week.